Sergio Ermotti, thank you so much for speaking to Bloomberg. So we have $1 billion in buybacks, positive outlook for 2024. You're confirming your profitability target for 2025. Are you pleased with today?
No, I'm very pleased that we finished the year with a very strong momentum. We achieved a strong underlying profitability for the second quarter, so for the fourth quarter, and also we saw clients confirming their trust in our organizations. 22 billion of net new assets, strong deposit inflows across wealth management and the P&C. We made good progress in winding down part of the non-core exposures, and also that has allowed us to then also reiterate the story that we are a capital. We want to have a dividend that is increasing progressively. So we have an increase of 27% of our dividend, and also in the second half of 2024 we will do a share buyback.
How would you describe 2024? I know your chairman has said in the past that it's a difficult year.
It's a pivotal year because if you think about the journey, the first 6 months are very intense. I think we're going to go through the merger of the two operating entity, UBS and Credit Suisse AG will merge in the first half of the year. The subsidiaries in the US and Switzerland will merge also during 2024. So this is the prerequisite to be able to realize our synergies. We already achieved 4 billion of cost savings, exit rate 2023. We now plan to have another gross savings of 9 billion between 2024 and 2026. Partially, this will be reinvested in the business to make our platform more resilient and up to speed with the requirements, but also to invest in our future.
So, Sergio, how important was this investor update, just to give a blueprint of the kind of growth that you want to attain, and how?
I think it's very important for investors to understand how we are connecting the dots between what we said in summer last year and in respect of our long-term plans, in 2026 plans and going beyond that. So today we are providing few dots between 2024 and 2026, how we achieve cost savings, how we manage our balance sheet, how we want to manage growth that has to come in a sustainable way. And also we give also some indications about what to look forward after the completion of the restructuring, which is then going to enable us to harvest, the work, and we did with a quite attractive returns.
So how will you achieve this quality, sustainable growth?
I think that one thing that we need to do is to be willing in the next couple of years to sacrifice a little bit of top line growth in order to improve the returns on our financial resources, particularly on the balance sheet. So I think that what we both was a very strong business in terms of client base, very good people, very good capabilities, but the balance sheet was not properly priced. We need to price risk in a better way, and that will help us to contribute to our financial targets for 2026 and beyond.
So exactly what does that growth look like? Is it a focus on the US or elsewhere?
Everywhere. I think that when you look at our wealth management business, we are planning to add around 100 million a year in terms of assets. This is basically the net numbers. We're going to want to grow more on a gross basis, but we are willing also to let some assets go that are not yielding what we believe is the appropriate level to cover for risk and capital cost. And then beyond that, we believe we're going to grow at around 200 billion. So if you think about what it is, we are recreating the business we just acquired. We acquired 700 billion of assets. In the next 3 to 4 years, we're going to build up organically the size of Credit Suisse again. So it's very important for us to do that, but in a sustainable way.
But for the US, for example, could we see an acquisition?
No, I think that the US, what we need to do is now to institutionalize our platform by giving more capabilities on deposits, on credit. We need to broaden up more of our global expertise in terms of CIO offering products, the asset management capabilities that are coming in. And what we need to do is also to allow and make it easier for our non-US clients to book business in the US, because a lot of our global clients, they want to be also booked in the US, and this is a real opportunity. So we believe that by doing that, we're going to be able to narrow the gap to our competitors and setting the base for the next phase of growth.
Sergio, when you look at dividends and buybacks, how important was it that this was ambitious or sufficiently ambitious for shareholders?
I think is the beginning of a journey. The journey. So the fact that we are increasing our dividend by 27% is a good message of confidence. Share buyback are coming. We want to be prudent in the way we look at share buyback. We want to complete the first phase of the integration of the legal entities in 2024. But it's to give a little bit of a flavor for where we want to go. By the end of 2026, we want to exceed the levels of capital returns we had before the acquisition. So I think that it's just a testament of our confidence and our ability to generate capital over as we also manage the integration.
For the investment bank of Credit Suisse, I think you were winding it down by 2/3, or this was kind of the plan. Where are we on that journey?
I think that's everything that needed to be done in terms of segregation of the non-core activities has been done, and now we have the third that we think is going to add value to the combined franchise is operating. They are ramping up their productivity. They are now part of the business, and I see a very good, promising starts. So we see we are winning mandates globally. So I'm very pleased with the momentum we see in banking.
When you look at the cost cuts, can you update us on any job losses?
There is no major changes in terms of what we were planning during the summer in terms of full-time equivalents reductions, and so what we have been updating this morning is more exactly the size of the gross savings. We were talking about more than 10 billion. Now we are pretty precise on saying what it is more than 10 is 13. But as I said, it's very important to understand that we are cutting in order to create capacity to reinvest also in infrastructure and growth.
But it's impossible to exclude further job cuts, of course.
No, but it's a continuation, of course. I mean, more than 50% of our cost is headcount, and there are duplications, but we try to do it over time, also managing natural attrition and also retirements, early retirements. We do internalize much more than we had before in the combined entities, so that's also allowing us to retain many talented people across both organizations.
Bonuses. If I don't ask about bonuses, I'm going to have angry bankers email in. What can you tell us about bonuses?
Well, they already know the answer, so they don't need you to ask me the questions because we have communicated their bonuses. So,
but a good year?
I think is a year that considered both the financial performance, but also the efforts that were put into this. I'm very pleased with the efforts that our people brought into making the integration successful. They are integrating well in the culture. They see the upside momentum. So I think compensation is reflecting all of it, but it's measured and totally aligned with the UBS standards on how we pay people.
Sergio, you also have an activist shareholder who's increased, of course, their stake in UBS Cevian. Have you had conversations? I mean, they're actually quite bullish on the UBS case, saying that you can double the share price in the next 2 to 3 years.
Oh, we are also very bullish about our future. So I think that's, I don't see anything in their investment case that deviates from our ambitions. So I think that's with the announcement of today, I think that we are also connecting a few dots with what they are looking and what we are looking, and so it's basically very well aligned.
Have you spoken to them?
We are always in contact with all major shareholders.
But in terms of valuations, I think that this would mean that an EU bank would match valuations of US banks. Is that possible?
Valuation is not to us to determine. Shareholders and the market will determine valuations. We will deliver results, and the market will put their own view and multiples on that.
Sergio, what kind of market are you expecting this year? Again, there's quite a lot of volatility as markets reprice what the Fed does, what a lot of central bank does. What do you think they're getting wrong?
Well, I think if you ask me what they're getting wrong is to pretend to know when you don't know. I mean, the truth of the matter is that the uncertainties that we see from many areas, not only the macro, more traditional economic indicator, which they seems to be much more volatile and unpredictable than we had in the past, but also the geopolitical situation, and also the emotions and the psychological effects on consumers and investors is a factor that is very, very complex to manage. I still remain convinced that the market has been too complacent early on this year about the Fed and central banks cutting so rapidly. The last mile of inflation fights seems to be more challenging. And I do think it's prudent for central banks to stay focused on fighting inflation because it creates unwanted consequences if we keep inflation way too high compared to the original targets.
And so how does that change client behavior?
For the moment, we see a little bit of clearly seasonality, and there is a concrete hope that rates will come down, but the uncertainty is still there. But we look positively for the first quarter of the year. But we do have to expect still continued volatility in the markets.
Sergio Ermotti, thank you so much for your time today.
Thank you.